We have waited all year for this massive announcement to come out last week, and it's more than just the rate cuts. You think that the market's about to be bullish, but could this be a massive bull trap? Let's dive in and have a look at what the data's telling us and what they're not telling us. And guys, make sure that you hit that like button and subscribe so that you stay alert when I deliver more content just like this. So first off, last week we finally had the very first rate cut. The US Federal Reserve cut the interest rates by 50 basis points for the first time in 4 years, and this got the entire crypto community so hyper bullish, thinking that we're going to go straight to 120k from here. But there's a lot more to the story that people aren't talking about. Whilst it is short-term bullish, there could be something really big brewing in the background that you need to be aware of. So make sure that you watch to the end so that we get through all of the stuff that you need to know to stay safe in this bull market. First off, yes, they cut the rates by 50 points, and there was also some senators calling for a 75-point cut at the last FOMC meeting. On top of that, the Fed also sees a 100 basis point cut in 2025, which could take us all the way down to 3% interest rates, which could be very, very bullish for Bitcoin. Reason why that happens is if you look at the DXY, which is the dollar strength, when interest rates go up, dollar strength comes up. If you saw my last video, we went a bit more into a deep dive about this. I do recommend watching that when you get a chance. And when the interest rates come down, the dollar strength tends to decline. When the dollar strength declines, Bitcoin tends to get stronger or historically see bullish price action. Now, one really important metric that we need to look at is the global liquidity. So if you put on this indicator here, it's called the Global Liquidity Index. It'll put a nice yellow line above the chart of Bitcoin so you can see how the price of Bitcoin reacts as the liquidity goes up. And if you take a look here, you'll notice that after we had the COVID crash, liquidity greatly expanded, which also led to the price of Bitcoin expanding and going up quite heavily. We then saw the global liquidity contracting, and we saw a massive dump on Bitcoin. Now, once again, we're starting to see global liquidity finally head up, and with these lowered interest rates, we could see liquidity skyrocket over the next coming months, which could also lead to a very nice bullish pump in Bitcoin. But there's a lot more to the story than just that, because in the background, we have what's called the yield curve inversion that's happened recently. Now, with the yield curve inversion, if you look at these gray lines here, that basically predicts when a recession has happened. And if you see here, every time that the yield curve goes below this zero line here, the black line in the middle, once it retests and reclaims that zero line, we have seen recessions follow not long after. Especially here in 2001, we then saw this recession come 84 days later. Again, in 2007, we saw a recession come 280 days later, and we're now reclaiming that zero line right now. How many days could it be until we see another recession? Will it happen? Will it not happen? Let's just point out one very, very important metric here. That in 2001, it was a dot-com bubble. Everyone was scared about that. Then we came into 2008, and there was the housing crisis that happened in the US that caused a recession. Now, what nobody's talking about is the commercial real estate crisis that's happening in the US that could potentially cause the next recession. Now, I'm not a financial advisor. I just share the information that I'm seeing and that I'm basically reading and educating myself on, and I plan to educate you guys as well on what I'm looking at. And if this is the data that we've seen over the last 40 years, and each time that we have seen the yield drop below the zero line, then to me, it looks like there's a very high chance that we could follow suit and see that next recession coming shortly. However, if we are looking at this though, what you'll notice is the recession doesn't come immediately. And if we see here, the first time it took 287 days, that was in 1990. We then saw 2001, it took 84 days. And we then saw in 2007, it took 280 days, and etc. So what this means is that usually, as the Fed cuts the rates, we do usually see a couple of months of bullish price action on the S&P 500 and on the NASDAQ. And that also relates to Bitcoin. As they are, S&P 500 and NASDAQ are risk assets, we find that Bitcoin is also a risk asset as well, and it tends to correlate quite well. So if the S&P 500 and the NASDAQ continues in a steady upwards direction, we may see Bitcoin also trend in an upwards direction. But one thing we need to take notice of is when there is chance of recession, we tend to follow this gray line down. Now, look, I'm bullish on Bitcoin personally. I'm a holder of Bitcoin. I want to see it go to the moon just like everybody else. But we need to follow the data that we're seeing, and chances are history does repeat itself time after time. Will it happen this time? I can't confirm that 100%, but this is definitely something that you need to be aware about, because if if you tend to go all in on all your coins and then in 2 months from now, everything starts to drop and you lose all your money, well, you would have really hoped that you saw this video earlier. You can see here that in times when there is a recession, what happens is the S&P actually turns into a downtrend, which can be extremely risky for the coins that we are holding. So historically, October is a very bullish month for Bitcoin. We usually see returns of 20 to 30%. And I'm hoping that we get the same this year, but let's closely monitor this over the next couple months. Make sure that you have subscribed to me, because I am going to be providing updates on this and also altcoins that I'm looking at buying over the next couple of weeks. So let's look at one of the altcoins that I'm actually focusing on at the moment, and that is the Mantra chain, also known as the ticker OM. And the reason for that is, one, when Bitcoin goes up, altcoins tend to follow. If we're looking at the others dominance chart, which is basically all of the crypto tokens minus the top 10, what we can see is that we are right now consolidating sideways, and it may be a time where we could look to find some alt entries. If you're looking at Bitcoin right now at the time of recording this video, what we can notice is that on the 4-hour time frame, we are starting to put in some bearish divergence, which means that there's a chance we could find ourselves a little bit lower by tomorrow morning. We could see the price comes down. I'm hoping it stays above the 62,600 mark. We'll have to reevaluate when we get back down to this support level, but it does look like we could be coming for a bit of a downtrend. On top of that, if you're looking at this indicator down below here, we have the open interest suite. What you'll notice is, it's changed to the daily time frame. Every time Bitcoin gets very close to the 6.5 billion level, what we find is that we have historically had a nice pullback. If you see here on Wednesday, 13th of March, we hit around 6.5 billion, bang, price dumped. Once again here in June, we saw open interest, 6.5 billion, boom, price came down. And now look at where we're approaching now. We're getting very close to that 6.5 billion level. At the same time, we're at a nice juicy level of resistance with bearish divergence. So what I'm looking for right now is a bit of a pullback on Bitcoin. Once again, I'm not a financial advisor, just sharing some of my thoughts, what I think is happening in the market. And if we get a nice bullish retest, bearish pullback with a nice bullish retest of this level of support, either 60,500 is really the level I need to hold to remain bullish, or 62,600, that'll be the better case scenario, then I'm going to start looking into alts. Now, this could give the others chart a nice chance to come back to the bottom of this range here, where I'll be looking for bullish divergences to enter some alts. And one of the alts that I have my eyes on right now is, once again, Mantra. Reason for that is they're about to launch their mainnet, and that's going to be coming in October. Now, given the fact that October is usually a bullish month for the crypto market, and on top of that, when we do have bullish momentum in the market responds really well to fundamental updates. When you're getting a big update like a mainnet launch, and especially for a real world assets platform, I think that this could be something that could see some gains over the next couple of weeks. And that's something that I'm looking at entering, but I'm not going to be entering it right now. I'm going to be waiting for the right confirmations. I'm going to be waiting for bullish divergences and good setups for me to enter to find the safest option. So what I will be doing is I will be posting all the altcoins that I'm looking at in our social media platform for crypto traders. If you click on the link down below in the description, you can sign up for free and you'll see the whole list of altcoins on that platform. It's not going to cost you $1. Guys, make sure you've hit that subscribe button. I'm going to be providing updates weekly about what I'm looking at, the news that I'm following, and the coins that I'm looking at trading. And the way that you're going to be able to see those notifications is if you hit that notification bell and subscribe. Look forward to seeing you on the next video. Bye for now. Please take a minute to read and understand our disclaimer. If you do not agree to this disclaimer, please close this video.